Joining me now for a look at what's driving the local markets, Gary Booysen from Vunani Private Clients. Hi Gary, quite a lot of blood on the floor there, and as I said, the only share that's up, there are a handful that are up, the only one that's up by more than a percentage point is Harmony over there.
It's like you said, maybe coming a little bit from the gold and the weaker rand, although not too dramatic if you actually look at the rand gold price, but maybe guys getting a little bit opportunistic. I mean, we've been fighting guys off, trying to buy the likes of Kumba and Anglo American, because they look like value.
Well, Kumba's another one that's up at 0.92%. Naspers also up there. One of the retailers, Mr. Price, the others are down.
Yeah, so I mean, looking at it, Mr. Price might be positive because remember it has just dropped out of the top 40. So maybe the guys that are selling off the index not so much affecting Mr. Price anymore. But overall, very difficult. I mean, it's I think on the Aussie.
What's behind it?
Yeah, it was 500 points down, a little bit of a recovery at the end. I think it's just generally the bad economic news coming out across the board. I mean, still a lot of worries about Cyprus, the main headline dominating the wires.
And also all the language about reassurance now. I mean, they didn't expect to have to do all this reassuring.
No, exactly. And I think that's the word that keeps coming up over and over again. It's that this is not a template, for future things. But I mean, I think that's what's making everyone nervous, because they're sort of looking at it going, okay, well, maybe it is a template. And
you have the head of the German finance ministry saying, no, it is a template. So they're mixed signals here.
Definitely mixed signals. And I think probably Europeans finally looking at the banking system and saying, they are going to start letting banks fail. I mean, we can't look at banks as this place where we can just go and stick money. They can take as much risk as they want, and they're too big to fail. It's something that you've got to select the bank that you want.
Well, if a bank knows it's too big to fail, it will try its best to fail. It will do the things that could make it fail.
No, exactly, 100%. And I think it's depositors are going to have to be a lot more cautious in future. Especially, I mean, obviously the smaller guys have been bailed out in a way, but the bigger money flows are going to have to look at the institutions that they're tying up with very, very carefully, and look at their tier 1 capital.
Well, and what underlies the entire banking system is trust, and that has been shaken there.
Definitely shaken, and we're seeing it in the markets today. And I mean, we're seeing Europe leading the way.
Let's look at the companies that reported today. We do need to talk about Capitec, which itself is a bank, seeing that we're talking banks.
Yeah, and Capitec, a great set of results, I think, this morning. It looked very, very good. And they still, I mean, it is priced into the company because everyone's been very optimistic on Capitec for a very long time. But I mean, a million, just about a million. I think it was 970,000 new customers. So they're really picking things up. They're really taking market share away from the big guys. I think their market share was up to about 9%. And also an interesting one, also the survey that was done on the company, just saying that I think 61% of people would considering opening accounts with Capitec. So their business model very good, and I think working for them.
Well, they keep also defying the prediction, saying this can't go on. It does go on for them.
No, that's it. I mean, we were looking at it. If you I think when it first listed, if you invested 10,000, you'd be a millionaire today. So it's had a spectacular run, and a lot of it is priced in. It's been a darling of the JSE for a long time, but it's still delivering. I mean, their earnings are very, very good, and I mean, their unsecured lending book did increase slightly, which is obviously a concern because of the the focus that's been put on unsecured debt. But overall, it's their market, and I think they're running with it.
Then the other big company reporting today, Basil Reed, the opposite kind of effect. No, not a surprise because of that sector, but is it worse than expected?
I didn't actually look at it too much, but I mean, it is, I mean, the number speaks for itself. I mean, I think it's a 183% decline in operating profit, and I don't think the market was expecting too much from construction. I mean, looking at it, their mining and engineering did do fairly well, but obviously the construction sector really lagging, and guys pegging it pretty much to how the construction, as you said, the construction industry.
Well, and looking at the chart we've got up there at the moment, 24% down on the year, the share price. But slightly up now, so the market's not saying that we didn't expect this.
Yeah, exactly, very much priced in. I mean, one of the interesting things to see, I mean, they are also, part of that loss came from a provision for, I think it was a 65 million rand provision for future Competition Commission inquiries. So, I mean, it's a sector that is still struggling to recover from 2008. Obviously, when their order books are very forward-looking. So, I mean, these are big projects that, it takes time to sort of deliver and then receive payment.
They've also battled a bit with government payments. I mean, their chief executive was one of the few who stood up and actually said so publicly and said how angry he was.
Exactly. I mean, construction across the board. I mean, a lovely, you know, infrastructure spend on paper, but you know, the delivery has been lacking somewhat. And then again, yeah, just to go back to also the competition issues in the sector. So I mean, it's a sector under pressure, and I mean, we keep looking at it, and it is a cyclical sector. So you know, you are sort of looking at it. I mean, they are declaring a lot of things in these results, almost airing all the dirty laundry. So I mean, if you are a long-term value investor, it might be time to start nibbling at construction, but short-term, you know, it's a sector we're staying away.